All right, what's up, YouTube? It's 31 March 2026, and it is the last day of the month. I'm doing a hot take because I made it a goal to at least make one video before the end of the month. And yeah, it's the last day, so here we go. S&P 500 had a nice little rebound today, up almost 3% on the day, I believe. This is the futures, so it's up a quarter percent from the close. But if we look at the 5 day, we had this nice little bottom here. This was this morning. Yeah, things are I don't know, they're kind of sketchy. I'm not 100% convinced that we're gonna go to all-time highs from here. I think we're still dealing with a lot with the Iran situation and inflation and everything else. So I'm not 100% sold that this is it, but we'll see. Who knows? As far as my positions go, I've pretty much stuck with the processes that I've created. A lot's changed since the last time I've made a video. So I got rid of all the cover call ETFs before the crash. So that was a couple months ago. Um, I just figured why pay, and I mean to each their own, but for me, why pay a management fee when I do this stuff all the time? So it didn't make sense. So the TQQQ has been my tried and true. That's been since the get-go. Doing the wheel, I've accumulated 400 shares. I believe my cost basis started around somewhere in like 55, high 50s a share. I'm down to 49.08. Been selling puts and getting assigned shares. And then when volatility spiked, I sold some long dated short puts to collect on that increase in VIX. Unfortunately, I sold them a little too early. You can see the dates here on the right. February, if I would have just waited a month, I could have got much more premium. And then these I sold throughout the month. But can't always be optimal. So I just play for what I've got. So for the 400 shares, I have cover calls written on them, well above my cost basis. So we'll see how that plays out. And for my bonds, I went ahead and loaded up on T-bill and SGov, and these are Treasury short-term notes. So I like them because it's pretty much a cash position. I can liquidate them fairly easily, and it pays a 3.5% distribution. Of course, that's subject to change, but and then I'm also long the 20-year notes, and those are down like 50% right now from all-time highs. So I just went ahead and loaded up a little bit on them. I didn't go too heavy. But I like the idea of not having any cash in the account and putting it in the T-bill because I might as well get the 3.5% yield on the cash sitting there. And then say some of these cash secured puts on TQQQ come to fruition and I have to fork up $4,200. Well, it'd be too easy just to sell $4,200 worth of T-bill or SGov to cover that. But in the meantime, the cash, why let it sit dormant? It can at least collect the 3.5%. So that's my logic on that. I'm still doing the SPX skewed iron condor. I'm actually really impressed with how it's done in this small sell-off. So, and I can compile those numbers in just a sec, of how it's performed. But yeah, I'm impressed with how it's doing. I'm sticking to the system. I'm doing my rolls. I've rolled it out. I think it started at 30, went to 45, then to 60 days. Now it's at 90 days. It's currently so I start with a $5,000 wide put spread, And then every time I roll it out in duration, I increase the width. So it went from 5,000 to 6,000 to 7,000. Now it's at $8,000 wide. And that's annotated here on the max risk. Um, and yeah, I've been able, every time I've rolled, I've collected slightly more premium. I have adjusted it a few times. That wasn't necessarily in the protocol, but they weren't major adjustments. So I'm still sticking pretty much to the plan. And the short call spread has just been, you know, profitable almost every other day because of the the downward moves. So that's been pretty nice. I actually even during this uh, recovery, I was able to take off the existing call spread and roll it out, and it was pretty much like a 90% winner. So went ahead and took it off and redeployed the call spread and collected 260 bucks. So this last one up here is the QQQQ. Kind of a funky position that I'm trying. It's more of an experiment. And basically, I'm selling a short put 7 days out, and then I'm buying a long put 14 days out. So, kind of going with that skewed idea of um, having the longer dated long option decay slower than the short option. Obviously, I want the short option to decay because that's how I make money. The longer one, I want it to decay short or slower so that I'm not losing as much money on the protection side. And then the twist is every week I redeploy another long put. So I always have two puts on at the same time. Overall, it's been profitable. Um, I'm gonna try to compare it to like just doing a regular old short put. I don't think it's that much more different, and it's a little bit convoluted in managing it because you got different expirations and yeah, I don't know if the juice is worth the squeeze on this one. I might just nix it and do a regular put spread. And then I planned on doing like ad hoc put spreads on SPY. Um, I just haven't done it in a while, so but maybe I will. So yeah, let's go to results here for SPX and see how we're doing. I'm gonna zoom out. All right. It's a little small, but we can see the dates here. So this is it goes backwards. So it goes January. So this is beginning of January, end of January, beginning of February, end of February, beginning of March, end of March. So end of March, we can see here a sum of $300. Again, I think that's pretty impressive considering that the market went down almost 9% this month. I'm still making money. Let's see overall from the beginning of the year now. I'm actually down, and that's because I had some rolls, these two losses in addition to these two losses. But even then, I am down, let's see. I am down $230 and I've allocated about 25,000 to this strategy. So net, I would say I'm down what, like 10% would be $2,500. So I'm down 1% on the allocation and the market's down 8%. So um, I'm outperforming the losses. So if I'm down 1%, the market's down 8%, then net, even though we're both down, I'm still beating the market. So I'm pretty impressed with it. I'm going to keep doing it and keep gathering all this data throughout 2026, and we'll see at the end of the year. But so far, I think it's working pretty well. I like the duality of it. It was doing well in a bullish market, and in a bear market, I'm not doing as bad as the market was doing. So that short call spread really comes in handy. We'll see. We'll see if we have a bull run and see how much of a hindrance that call spread could be. Because if I'm constantly having to roll it for a loss, it can definitely create a drag. So we'll see how it all plays out. But yeah, that's my update for March. Happy trading. God bless.